Hey, welcome back. It's Jason Walter here. A common question I get is, are more investors buying houses right now, given the fact that inflation is basically at 8.6%, the highest levels in the last 40 years? So are more investors buying houses because this is a hedge against inflation? Or are investors buying less houses because of rising mortgage rates and, of course, of rising home prices? So in today's video, I'm going to give you some insight regarding that because Redfin actually published an article regarding this today at the time of this video, which is the 15th of June. So with that said, let's go ahead and dive right into the video. But first, if you guys are looking to buy or sell a house anywhere in the United States, then check out homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. So with that said, let's go ahead and dive right in. So this is an article, again, just published today at the time of this video. It says here, investor home purchases decreased by 17% from the pandemic peak as mortgage rates have been increasing. And what Redfin found is that real estate investors purchased 77,829 houses in the metros that they are tracking in the first quarter of this year. That's actually down 11.5% from the previous quarter, which is the fourth quarter of 2021, and also down 16.5% from the third quarter of 2021 when investor purchases hit an all-time record high. On a year-over-year basis, investor purchases were up 30.7%, the smallest annual gain in a year. However, though, investors bought a larger share, in other words, a larger percentage of the houses for sale, a larger share of American houses than ever before. They purchased a record 20% of all houses that sold in the first quarter. Again, purchased 20% of all the houses that sold in the first quarter of this year. That's up from 19.2% from 1 quarter ago and 15.3% from 1 year ago. In other words, investors purchased fewer houses in Q1 of this year compared to the previous 2 quarters. However, though, they purchased a larger percentage of the houses that actually did get sold. And it says here, a decrease in overall home purchases nationwide allowed investors to increase their market share even while purchasing fewer houses. So I actually made a note regarding this. So obviously we have less houses for sale, so it makes sense that investors purchase less homes. But investors have been buying a higher percentage of houses that are listed for sale, and that percentage has been increasing, which of course increases their market share. And here's a really good chart showing the total number of houses bought in the US by investors since Q1 of 2000. As you can see here, for Q1 of 2022, again, 77,000 houses sold, but below the levels we saw in Q3 of 2021, when approximately 93,000 houses were purchased by investors. But as you can see here, we've seen fewer houses purchased by investors for the past 2 consecutive quarters. So in Q4 2021, investors purchased approximately 88,000 houses in the United States. But that decreased in the first quarter of 2022 when they purchased approximately 78,000. So in other words, investors have been purchasing less houses ever since basically Q4 2021, which really makes sense when we look at housing supply in 2021. So housing supply basically peaked around August and September of last year, but then it absolutely tanked after that. So basically in the peak of 2021, we had approximately 773,000 houses for sale, but by the end of the year, we only had 582,000 houses. Here's something also I want to bring to your attention when I was looking at this graphic here. So obviously in 2019, we had approximately twice as many houses for sale compared to now, which is really interesting to see this because right now, again, we have 77,000 houses that sold in Q1 of 2022. But for much of 2019, investors purchased less than 60,000 houses per quarter, even though there was twice as many houses for sale. So in other words, investors are purchasing much more houses now compared to 2019 and really compared to the past 20 years. But even though investors are purchasing less houses compared to the previous 2 quarters, as you can see right here, the market share has been increasing, as I mentioned here. So investor market share hit an all-time high of 20% in the first quarter. So Q1 2022, they had a market share of 20%. In other words, they purchased 20% of all houses that were sold in Q1 of 2022. That's far higher than the 15.3% we saw 1 year ago. Interesting enough, this market share of 20% we're seeing right now is basically double the share that we saw in approximately 2005 all the way up until 2010. And by the way, this article by Redfin is based on an analysis of 40 of the most populous US metro areas. Also, they define an investor as any institution or business that purchases residential real estate. investor home purchases are falling for the exact same reason overall home purchases are falling. Surging mortgage rates and high housing prices have made it more expensive to get a mortgage and buy a house, obviously. While roughly 3/4 or 75% of investor purchases are made with cash, investors are still impacted by rising mortgage rates because often they take out loans in order to get that cash. So in other words, we're seeing a slight pullback from investors because we're seeing high home prices and of course rising mortgage rates, which are impacting investors because they often take out loans in order to get access to the cash. Interesting enough, this has some comparison to 2013. So in 2013, we had a ton of investors buying single family houses in the greater Sacramento area. We had BlackRock and as well as Waypoint Homes buying houses here, a lot of other investors as well. But what happened in 2013 is that home prices absolutely skyrocketed, but rents did not skyrocket. So we saw a lot of investors buying houses in 2012 through basically the first half of 2013. But once we hit June of 2013, a lot of these large institutional investors stopped buying houses because their return on their investments were decreasing. That's because prices were increasing, but rents were not increasing at the same rates. Therefore, their ROI was decreasing. So what we're seeing right now, though, is that we're seeing high home prices or home prices still increasing and also increasing mortgage rates. And that's causing some investors to pull back on their purchases. However, though, according to Redfin's chief economist, he went on to say the following here. The fact that investors are still able to grow their market share while buying fewer houses signals that they are not feeling the pain as much with these higher mortgage rates as individual buyers. And many of these individual buyers, non-investors, have been priced out of this market altogether. It also indicates that individuals who still can afford to buy a house will continue to face competition from investors. In any case, investors purchased a staggering $49.8 billion worth of houses in the fourth quarter of this year. And their average price home that they purchased was $427,000 compared to $372,000 from 1 year ago. One real estate agent based in Nashville, Tennessee said that investors are pulling back from this market because of high home prices. And of course, they're looking for home prices to decrease and therefore looking to buy deals. Obviously, one of the reasons why investors have been purchasing houses is because of soaring rent prices. And according to Redfin last week, the median monthly asking rent in the US surpassed $2,000 for the first time in May, rising 15% year over year to a new record high of $2,002, which is the average monthly rent payment. And here it is right here. The average for May 2022, just over $2,000 per month. That's an increase by 2% month over month, but a giant increase of 15.2% year over year, which coincides with the increase in home prices year over year as well. Also a gain of approximately 15%. So here's a chart showing monthly average rental prices over the past several years. So in 2019, the average monthly payment for rents across the United States was approximately $1,600 per month. That was basically flat all the way until 2020-ish. But then look at 2021. For May 2021, it increased to $1,700 per month, and now we're over $2,000 per month. Also, according to Redfin, asking rents surged 48% year over year in Austin, Texas, the largest increase on record in any metro area since the beginning of 2019. And according to Redfin, here are the top 10 metro areas that saw the fastest rising rents compared to 1 year ago. Austin increased in rents by 48% compared to 1 year ago, absolutely insane. That was followed by Nashville, Tennessee, Seattle, Washington, and Cincinnati, Ohio, all gains of 32% year over year. Also, they only saw 3 metros out of the 50 that saw rents decrease compared to 1 year ago. That was in Milwaukee, Wisconsin, a decrease by 10%, followed by Kansas City, Missouri, and then Minneapolis, Minnesota. What I also found to be very interesting is that investors tend to gravitate towards lower price houses for houses to purchase. So low price houses made up 44.9% of investor purchases in Q1 of this year, whereas mid-price houses only made up 30.3% and high price houses made up 24.8%. Investors also purchased a record 25.3% of all low price houses that were purchased in the metros tracked by Redfin in the first quarter of this year. Compare that to 18.1% for mid-price houses and only 16% of high-end houses. So in other words, investors purchased 1 out of every 4 low-price houses for these metros that they are tracking. On top of this, investors purchased more single-family houses than any other property type. So single-family houses remained the most popular property type that they're purchasing, representing 73% of all purchases by investors in the first quarter, and compared that to multifamily properties, that only represented 4.5%. Also, here are the top 10 metros by investor market share, again for the first quarter of 2022. Leading the pack was Atlanta, Georgia. 33.1% was the share of houses purchased by investors in Q1 of 2022. So in other words, investors purchased 3 out of every 10 houses that sold in Q1 of 2022 in Atlanta, Georgia. And that was followed by Jacksonville, Florida, Charlotte, North Carolina, Phoenix, Arizona, 29% on market share there. That was followed by Miami, Florida at 28.2%, then Las Vegas, Orlando, Tampa, Nashville, and then Columbus, Ohio. So again, Atlanta, Georgia saw the highest share of houses purchased by investors. The lowest share by the metros that they're tracking, though, was actually in Providence, Rhode Island, only a market share of 8%. Compare that to Q1 of 2021, 1 year ago, Miami, Florida was actually at number 1 spot at 24.3%. So comment below with your biggest takeaways from today's video. Also, if you got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you in the next video.